The gold market has fallen a bit during the trading session on Friday, only to turn around and show signs of life as the market continues to be very noisy. British pound had outperformed a lot of its contemporaries against the US dollar, so if this thing starts breaking down, it could drag other currencies right down with it Friday as we have broken to the upside. Markets continue to chop on Friday. This is Chris Lewis from Hola Prime taking a look at your technical analysis roundup on Friday. The gold market has fallen a bit during the trading session on Friday, only to turn around and show signs of life as the market continues to be very noisy. The Tuesday candlestick, I think, brought a bit of reality back into the market. So the question now is whether or not this market can make a bigger decision to the downside or the upside. As things stand right now, I think we're just kind of stuck in a holding pattern, and that does make a certain amount of sense considering the gold had rallied so drastically and then just got absolutely crushed on Tuesday. And at one point, Wednesday looks like the market was going to completely fall apart. As things stand right now, it's probably worth noting that the $4,000 has held, and that level, of course, is an area where we've seen some action previously. It's a large, round, psychologically significant figure, and therefore a lot of options traders are probably paying close attention to it as well. If we were to break down below the $3,950 level, I think you could see real trouble for gold. This is a classic parabolic trend change pattern so far, although we haven't had the subsequent bounce and then breakdown. Really, at this point, I'll be watching any rally for signs of a lower high, because if we get that, it could signify that we're going much lower. Overall, there are plenty of reasons to believe that gold will go higher, but we're also hearing everybody talking about gold and silver. That is not a good look. That is not something that typically is conducive of a rally that can last very long. Silver markets remain very noisy as well. We have stabilized over the last 3 days. That is a good sign. That's something that's desperately needed because, quite frankly, silver had gotten so bad, I started to hear people on the street talking about buying it. These are people who don't trade or really don't care about financial markets. If that's the case, then you have to ask the question, who's left to get involved? I think that's part of what we've seen. But also keep in mind that silver is quite a bit different than gold in the sense that it's an industrial metal. It's not a precious metal. So with that being the case, I think you've got a situation where gold and silver may diverge a bit. We'll just have to wait and see. If silver gives up the $46.75 level, I think at that point in time, silver's in serious trouble. If it can break back above the $50 level, that would be a very bullish sign, but it is worth pointing out that the area around the $50 level has been a barrier for decades. It's not really beyond the possibility that this market may have just peaked above there and stalled out, perhaps even kicking off a trend change. I think there is basically a $3 range between $50 and $47 that will determine where we go next. The euro has risen a bit during the Friday trading session against the US dollar, perhaps helped a little bit by the weaker than anticipated CPI numbers, but really, I don't think that changes much because really all it does is tell us that the Federal Reserve is likely to cut interest rates. Well, we knew that. We knew that at the highs. Nothing has changed. And the fact that we gave back just a bit of the gains during the session is not a surprise to me. And in fact, I think we've got a situation where any rally that shows signs of exhaustion is probably worth looking at as a potential short. The 1.1550 level being broken to the downside, it opens up a move down to the 1.14 level, and it wouldn't surprise me at all to see that. That being said, it is very difficult to think that it happens in the next day or two, but I think that might be where we're going over the longer term. If we were to break above the 1.1733 level, then we take out the swing high, which would be the beginning of perhaps trying to reclaim the uptrend. The British pound has found itself very noisy during the trading session here on Friday, as the back and forth action around the 200-day EMA makes quite a bit of sense that we could see a little bit of technical trading here. We are between the 50-day EMA and the 200-day EMA, but if we break down from here, the 1.32 level will be targeted next. I think ultimately you've got a situation where we had broken above or below an uptrend line, and now we're testing the major trend following signal, the 200-day EMA. Keep in mind that until recently, the British pound had outperformed a lot of its contemporaries against the US dollar. So if this thing starts breaking down, it could drag other currencies right down with it. The US dollar has gone back and forth against the Swiss franc as we continue to see a lot of noisy behavior. And it's probably worth noting that the 0.6 or 0.79 area is an area that we will have to watch as a potential support level. All things being equal, I think this is a scenario where this is trying to hold for support. That being said, if we bounce from here, the 0.80 level could be a barrier right along with this 50-day EMA. If we break above there, then the 0.81 level is tested. I do think that eventually we try to find some type of bottom here, but keep in mind both of these are considered to be safety currencies. If we break down below the swing low at the 0.7828 level, then we go much lower. Ultimately, this is a market that I think continues to see a lot of volatility, mainly because there are a lot of questions asked about global growth, global economy, etc. And both of these tend to do fairly well in that risk-off type of environment. The US dollar has rallied a bit during the trading session here on Friday, with the 153 yen level offering significant resistance. If we can break above the 156 yen level, then it opens up a move to the 140 or 154.50 yen level. Short-term pullbacks, I think at this point in time, open up the possibility of a buying opportunity near the 151 yen level. This is a market that, quite frankly, I think continues to be noisy, but I also recognize that we have a situation where the interest rate differential continues to favor the US dollar over the Japanese yen, as the Bank of Japan is likely to continue to keep its loose monetary policy going. And with that being said, this is a market that I do think goes much higher. If we get a dip, look at that as value. The US dollar has gone back and forth during the trading session on Friday, as the 1.40 level continues to be a magnet for price. I think the CPI number coming out cooler than anticipated probably is part of what's going on here. But if we can break above the 1.41 level, then I think we go looking to the 1.4250 level. All things being equal, I do think that it's really difficult to short this market. And I would even look at the area below where the 50-day EMA is, basically the 1.39 level, as your floor. Ultimately, I think we go higher. I think I am going to continue to see this as a market that I hold on to. Getting that swap at the end of every day really pads the move that I've been in. We previously had been in an inverted head and shoulders, and it measures to the 1.4250 level, which happens to be supply, so it all ties together quite nicely in this environment. The Australian dollar has gone back and forth during the trading session on Friday as we continue to just flounder around the 200-day EMA. The 200-day EMA has been like a magnet for price for a couple of weeks, but really, when you look at this pair, it's basically been dead money for the last several months. With that being said, the market is likely to continue to see the 0.64 level as a floor. If we can break above there, then the 0.66 level gets targeted. The 0.6550 level has been like a magnet for price right along with the 200-day EMA. And quite frankly, unless you're a short-term range-bound scalper, the Australian dollar just isn't a place to be in this environment. It just doesn't have anywhere to be as it is heavily influenced by China, Asia, and the US-China trade situation. I think everybody's just been in a wait-and-see pattern. The New Zealand dollar spiked during the trading session, just enough to hit my stop loss, and then turned around, as it tends to do in the Forex world. The shooting star, of course, is a sign of weakness. I think we're going to hang around the 0.5750 level, which is an area that's been both support and resistance multiple times in the past, and therefore I think it makes a certain amount of sense that we just hang out here trying to determine what the bigger move is. Right now, I still favor the US dollar over the longer term, and I do think that most traders probably feel the same way. That doesn't mean that we have to short here, though. I think looking for signs of exhaustion to sell will probably be the way going forward. At this juncture, it's worth noting that the first sign to sell was Friday. We'll just have to see maybe if there's a little bit of follow through in this pair. If we break above the highs of the Friday trade, then we could go looking to the 50-day EMA at the 0.5822 level. The euro has rallied quite nicely against the British pound, as we are now testing the 0.8750 level. If we can break above that level, it's a very bullish sign for the euro and probably sends the pound lower against most things. It is probably worth knowing that we did just break out of a short-term consolidation area, so this means something, but we haven't cleared that hurdle yet. If and when we clear that 0.8750 hurdle, then we can go much higher. It is worth noting that we are in the midst of divergence as well, but divergence, it happens, and sometimes nothing happens as a result. With this, I'm watching the upside. We'll see if we get a daily close above the 0.8750 barrier, or if we pull back from here. A pullback opens up the possibility of a move down to the 50-day EMA, which of course is an indicator that a lot of people pay close attention to. With this, I am very interested in what happens over the next couple of days, because quite frankly, it opens up the possibility of a either range-bound trade or a bigger move to the upside. Either way, I think we are about to see a certain amount of volatility return. So the euro continues to be very noisy against the Swiss franc, and it's probably worth noting that we are trying to get to the 0.9250 level and beyond. If we can break above here, that would be a sign that the euro might start recovering against the Swiss franc. We had a very weird day on Thursday that suggests that maybe the Swiss National Bank got involved, because all of a sudden we turned around quite viciously after breaking through major support at the 0.92 handle. The Swiss are long known for defending specific barriers, and as a result, this has the hallmarks of an SNB intervention, but we'll just have to wait and see how that plays out. I think what it does tell you, regardless, is that there is a bit of a floor underneath here, and it's worth watching. It's also worth noting that this pair is highly sensitive to risk appetite, with the euro climbing when risk appetite is good, and the Swiss franc climbing, or the pair falling, when risk appetite gets eviscerated. Keep in mind, the Swiss franc is, without a doubt, one of the premier safety currencies out there, so it makes quite a bit of sense that we would see that continue to play out from a risk appetite perspective. The euro strengthened quite nicely against the Japanese yen during trading on Friday, as it looks like we are trying to break above the 178 yen level. It's also worth noting that we fell about a week ago to test the top of the gap after the Japanese election, which suggests that we have done the gap and go type of setup. Keep in mind that the Japanese are expected to keep very loose monetary policy now that the new PM is likely to really push for loose monetary policy. She is a economic dove. So with that, I think you have to look at this as a Japanese yen related pair, not so much the euro. As you will see, all of the Japanese yen pairs are basically doing the same thing, which is typical. But really, at this point in time, it's quite telling. The British pound has gone back and forth during the session here on Friday to form a pretty ugly looking inverted hammer. We are below the 1.06 level, and that is a bad sign overall. Ultimately, this pair won't garner the kind of attention from the Swiss National Bank that the euro against the Swiss franc gives, but it will have a little bit of a knock-on effect from any intervention in that pair. The question at this point in time now is whether or not we continue to go lower. If we do, the most logical place would be the 1.05 level to target. It's a large, round, psychologically significant figure, and it's only 80 pips away. If we rally from here, the 1.0650 level will be a bit of a barrier to overcome and would be the first step in trying to recover, but this just looks like a miserable place for the British pound at the moment, and I just don't like the idea of buying. It would have to really prove itself to have me doing that. The British pound did rally a bit against the Japanese yen, but go back to the euro against the yen, you can see just how weak this is. Ultimately, I think it does follow the other currencies against the Japanese yen, but it's going to be a lot more sluggish, and that makes sense considering that the British pound itself has struggled. The shape of the candlestick is a shooting star, and while that is bearish, I think all that really signifies here is that we are likely to see a bit of a pullback. That pullback, more likely than not, will get bought into with a 202 yen level offering a bit of a floor. If we break down below there, then we will go looking to the 50-day EMA, which is at the top of the gap from previous action. The 205 yen level is an area that we will be targeting, as it was a large, round, psychologically significant figure that was recently ran into. Ultimately, I expect to see a lot of choppy volatility in this area, but an overall bullish presence. The Canadian dollar has actually rallied against the Swiss franc during the trading session on Friday, despite the fact that we are in a vicious downtrend. The 0.57 level is an area that we will have to pay close attention to, and I think at this point is your next major barrier. We formed a shooting star there on Thursday, confirming market memory from the previous support. Even if we go above there, we have a downtrend line and the 50-day EMA coming into the picture offering resistance, and therefore I think the upside is somewhat limited. I don't like the Canadian dollar, and the Swiss franc, of course, is strong for a multitude of reasons, not the least of which would be the fact that global trade tensions are still in the forefront of the thought process of traders. There's trade tensions, there's geopolitical tensions. There's just plenty of reasons to think that you still favor the downside. And then, of course, you just have this massive downtrend that's been in effect for months. So with that, I look to fade rallies that show signs of exhaustion in the Canadian dollar against the Swiss franc. The Canadian dollar also rallied against the Japanese yen, but again, this is, I think, more about the Japanese yen than anything else, as it simply cannot get up off the floor. short-term pullback here in the session only turned into a bullish candlestick at the end of the day. Ultimately, I'm watching this area right around 110 yen to see if we can get above there. Actually, we didn't even make it there last time. But when you look into the past, right around this time last year, or maybe November, we had seen the 110 yen level offer quite a bit of resistance. I think that market memory will come into play eventually, but ultimately, all yen related pairs will move in the same direction. So if we start to see other pairs like the dollar against the yen, the pound against the yen, the New Zealand dollar against the yen, etc., rally, then you almost certainly will see this pair follow right along. The euro had a day against the Norwegian krone as the 11.55 level, a level that I remember talking about yesterday as being temporary support, has held. So now the question is, do we continue this overall momentum? It's possible. I mean, we could be looking at a market that goes looking to the 200-day EMA near the 11.71 level, maybe even the 11.72 level, and then we have the 11.75 level as resistance. So all things being equal, I think you've got a situation where we are just going back and forth here, maybe between 11.55 and 11.75 in range-bound trading. But if you look at the last year and a half of the euro against the Norwegian kroner, it's really not a huge surprise to be range-bound. The euro also bounced a bit against the Swedish krona, but the 10.88 level has been support multiple times. So this really shouldn't be a huge surprise. The question now will be, will we continue to go higher, perhaps looking towards the 11 krona level, where the 50-day EMA sits, or even 11.08, an area that's been like a brick wall. The 200-day EMA is now racing toward the 11.08 level, so that will also end up being another reason to think that the barrier could come into the picture. The New Zealand dollar has rallied a little bit against the Japanese yen during the trading session, but really at this point, I think you've got a scenario where you're just continuing to see the overall sideways action. But one of the things that have come into the picture is that the New Zealand dollar, which has been fairly weak, is trying to at least make a move to the upside. And perhaps just as important, maybe even more important, is the fact that the Japanese yen is so weak. I don't like this pair, though, because quite frankly, if I want to short the Japanese yen, I'll just do it against other currencies that are much stronger. I don't see any reason to play games in a market that features two extraordinarily weak currencies. However, I do fully admit and freely admit that the New Zealand dollar will probably follow the same direction against the Japanese yen as any other yen-denominated pair. The New Zealand dollar has rallied a bit during the trading session here on Friday, as the New Zealand dollar rallying against the Swiss franc suggests that perhaps we have a little bit of risk on behavior, but I also recognize that the 0.46 level is an area that I think offers a short-term ceiling. Even if we break above there, then the 0.4650 level offers resistance from not only previous market memory from both support and resistance, but also the 50-day EMA. I'm looking for an opportunity to short this market, and I think I'll get it if I'm patient enough. The US dollar has rallied against the Mexican peso during the trading session, as it looks like we are getting ready to go to test the 18.50 Mexican peso level. The 50-day EMA is there, and of course we have a lot of market memory in this area. Not only that, we have a downtrend line. Keep in mind that the US dollar is going to move opposite here than it does in many other pairs, mainly due to the fact that the better the U.S. economy does, the better the Mexican economy does, and therefore it strengthens the Mexican peso. You also have to keep that the interest rate differential is favoring Mexico, so that's another reason to think that we continue to see the downtrend. That being said, if we break above the 18.70 Mexican peso level, then the market goes looking to the 19 peso level. That is congruent with an idea of testing the 200-day EMA, which obviously would be important. So I'm looking for an opportunity to short this pair given enough time, but I need to see a pop and some type of exhaustion or a breakdown below the 18.20 Mexican peso level, because that would be a continuation down to the 18 peso level. So the crude oil market has given back quite a bit of the gains during the trading session, and I think you've got a situation where we had gotten a little overdone, breaking above the $62 level to break above the 50-day EMA, only to turn around and form a shooting star. At this point, I'm willing to short this market unless something happens over the weekend. But keep in mind that despite the fact that we have sanctions on Russia, the reality is everybody's pumping a ton of oil, and Russia's still going to be selling to Europe, China, and India. Let's be honest here. That's been the game we've been playing for 2 years. The oversupply is no accident. The NASDAQ 100 rallied quite nicely during the trading session on Friday, as we have broken to the upside and closed out the week on a fresh new high. That, of course, is a very good sign. So, with that being said, I think you continue to look at this as a buy on the dip scenario. The 25,000 level is an area that I think now starts to offer a floor right along with the uptrend line and the 50-day EMA. The S&P 500 is now at an all-time high. We are getting close to the 6,800 level. I think we probably break through there eventually, and short-term pullbacks do end up offering buying opportunities ultimately. The 6,700 level is an area that traders will look at as a potential floor in the market, followed by the uptrend line and the 50-day EMA. That being said, keep in mind that CPI came in cooler than anticipated during the trading session on Friday, and traders are now celebrating the idea of increased Federal Reserve interest rate cuts, which of course has people buying stocks. The Dow Jones 30 has rallied rather significantly, breaking above the 47,250 level. All things being equal, short-term pullbacks offer buying opportunities, and I think we continue to go much higher. All things being equal, this is a market that the traders will be looking at the 46,500 level as a floor. All things being equal, this is a market that I think is going to look at the size of the candlestick as a real sign of excitement and bullish pressure, and therefore I have no interest in shorting this market. I think given enough time, we go much higher. The Bitcoin market has rallied a bit during the trading session here on Friday, only to drop back and give up about half of the gains. That being said, I think we're just trying to consolidate somewhere around the $110,000 level. We'll see where we come out on Monday, but if we can break above that 50-day EMA, that could open up a move toward the $117,500 level. If we break down the $108,000 level, followed by the $105,000 level, offer support. The Ethereum market tried to break higher during the session. It looks like $4,000 continues to be a barrier. Much like Bitcoin, I want to see this thing break above the 50-day EMA so that it can go looking to higher levels. Right now, the $3,700 level looks to be the floor. If we break that, hello, $3,400. All things being equal, risk appetite I think is fairly good for stocks right now. U.S. indices continue to be fairly robust. The U.S. dollar, it gave back a little bit on Friday, but ultimately the U.S. dollar is relatively strong. Precious metals are going sideways, and that makes sense because we've had such a wild market. And oil, after its knee-jerk reaction to the Russian sanctions, seems to be running out of steam already. That being said, next week will be volatile, and we don't know what happens over the weekend, but quite frankly, most of the trends that we've been seeing for a while are still very much intact, and I just don't see how that changes anytime soon. Again, it's worth paying attention to the weekend headlines, but unless something changes drastically, expect all those trends to continue.
Hola Prime, trade with transparency.